You say that Rio Tinto will be a winner in the mining sector post the COVID-19 world that we're currently living in. Why?
Well, I think once we get through the next sort of 12, 24 months of uncertainty, companies like Rio Tinto, the ones that have the strong balance sheets, are going to be able to make it into the next cycle. And the amount of likely capex cutbacks that we see through this downturn is only going to really exacerbate the next cycle. Our issue in the short term is much more about how much of the demand destruction that we're starting to see come through, how much that still may impact commodity prices, which keeps us cautious on Rio shares over the next 12 months.
Do you think that we're going to move into a period of consolidation when it comes to the mining space post-COVID-19? Those miners, of course, that perhaps aren't sitting on as much cash may become vulnerable to some of the bigger guys like your Rio Tinto, BHP and the like.
Yeah, certainly. I think that one of the things that Rio Tinto has done very well is hold off on making a big acquisition. There's been a lot of speculation over the last couple of years. They'd look to rebalance the iron ore portfolio, which is, as your reporter said, 90% of their profitability at the moment. The ability for the company to be able to see the ability for the company to be able to get itself to a point where it is ready to do an acquisition at this point, though, is going to be probably more challenging than maybe it would have been 6 months ago, from the sense that although it would be better value, it's also going to be much harder to be able to get other boards probably to agree. Although, depending on how bad prices get, it could provide some pretty reasonable opportunities for the company.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.